But all right, I'm going to bring our next guest onto the stream. Long friend of Benzinga, Mr. Tim Melvin. Tim, are you here with us?
I am here. How are you doing?
Doing well.
How's the weather up there in Detroit? I have to ask.
What I learned something this morning, and I learned that there's a big difference between 9 degrees and 15 degrees. You think about it, you're like, it's only 6, right? It's only 6 degrees. It can't make that big of a difference. Yesterday it was 9. Today it was 15. And I was significantly warmer this morning.
That sounds wonderful. Yeah, we had that too. We were only 80 yesterday, and we'll be like 88 today. So it's noticeably warmer out.
Yeah, and I'm curious to chat. I'm throwing this one out there to ZingerNation. Where are you all at? Drop that in the chat. Let's get some geos in there. There we go. Sorry, Tim, I got to cut you off. We hit the 1.1 thousand likes. I promised the group that we would give away a Benzinga Pro if we hit it. We have our winner, Tara Hill, TARAHILL, in the chat there. Let's go. powerhour@benzinga.com. That's the email address. I'm putting in the chat, powerhour@benzinga.com. Send us that email. We'll get you hooked up, guys. Maybe we'll do another Benzinga Pro later today too. It's by popular demand. But all right, Tim. Let's talk stocks a little bit.
Okay.
Where do you want to go? You want to talk banks? You want to talk other sectors?
Let's look at everything in general first. I mean, it's been a really interesting year, as I'm sure everybody knows. And I haven't been on the show in quite a while, but since I do follow banks very closely, when this all kicked off back in March with the coronavirus and the pandemic and all the insanity that followed that, we walked right up to the edge of the collapse of the banking system. We were closer than we've ever been in my lifetime.
Okay.
Had it not been for the stimulus packages and the steps that the Fed took, we would have broke the system. So, and if you look at bank stocks, which of course is my specialty, they stayed down. When everything else rallied back off those lows, they didn't move at all until we got clarity on the vaccine. So now they started to move. We've recovered pretty much everything. As we came in, Luke, as you know, we were 50% cash on March 1st of this year. So this didn't hurt us as bad as it did some other folks. I mean, Castine Capital, who's been around forever in the small bank space, they just called it quits in September. They said small banks can't be invested in. We're done. Of course, 2 months later, we got all that good clarity on the vaccine, and banks are viable again. But when I look at the broader market, I seeing some insanity that reminds me a lot of maybe 98, 99. Of course, you've got the whole Wall Street bets and GameStop and all that craziness. But then when I look at what's going on in SPACs, now I paid my bills doing SPAC arbitrage in 2007 because the markets were overvalued. And it was the only thing I could find to do as a broker at the time to generate any revenue. What's going on today with people paying way over the value of what's in the trust, that's just insanity. We made a lot of money by buying them below the value of the trust. In fact, we did CCIV just back in December. We put that out. We put that out as for banking on profit subscribers, $9.80. That thing is now up to 30, I think, as of yesterday. Yeah. So there's a way to play SPACs, and people are taking just crazy risks, which makes me a little nervous about the overall direction of the market. Meb Faber wrote this week that looking at low interest rates, which are supposed to justify these high valuations, right?
Yep.
Except every other time in history, when we had low rates at the start of a market move, we also had low multiples, very low multiples of earnings, asset value, and much higher dividend rates. Dividends were 4 or 5% as these moves started. Today we've got low rates, but we've also got nosebleed level valuations. So I'm kind of have no idea which way this market will go, and I'm really glad I don't make my living predicting the general direction of the stock market right now.
Yeah. So let me ask you this though: do you have some individual names that you like right now?
In the banking space, yes, I do. We've got some stuff we can throw out for you. Banks came into this with more capital than they've ever had, and their loan books were in better shape than they've ever been in. Once we got the Fed action, and most importantly, some clarity on the vaccine, bank stocks have started to move up rather nicely. But there's still a lot of these small community banks that are trading below tangible book value that, as the economy begins to recover, are going to become takeover targets. Bank M&A just dried up this year because it became about protecting your balance sheet, getting the PPP loans and the Main Street relief loans that your customers needed out there, and just surviving. This year, I think we'll start to see once again some offensive, I got to grow my bank M&A activity. So we feel really good about 2021. And in fact, we're off to a pretty good start, even though we're still at about a 40% cash level in the portfolio, because we're very strict about what we will pay for stock. So we're just kind of biding our time. There's some thrift conversions coming up that we're really interested in, and that'll give us a chance to add some names to the portfolio. But one of my favorite picks right now is way out in Washington State, and it's right up on the Canadian border. And it's First Northwest Bank Corp. That's FNWB.
Wait, give me that one more time.
FNWB. And this is it's a smaller bank, but it's incredibly well run. They've got plenty of capital. The non-performing assets are an incredible 0.13% of total assets at the bank. Most banks are well over 1 right now. So very well run, very good at lending money. They just reported record earnings. The Feds approved them for a stock buyback, so they've been aggressively buying back stock in the fourth quarter. They've still got over 1 million shares of stock left to buy back, so we'll continue to see buyback activity supporting the stock. In spite of that, it's only trading at about 85% of tangible book value here. So there's lots of upside in this stock when you figure most takeovers, even at today's prices, probably going to happen at 1.3, 1.4 times book value. So there's almost an arbitrage between what the takeover premium should be and what the current price to book is. But like I said, just very well run. There's been insider buying throughout 2020. Insiders already own a lot of the stocks, so there's real skin in the game. Excuse me. So just well run bank. I think there's a ton of upside.
Okay, so I'm just gonna recap it for anybody who's just tuning in. So Tim's talking to us about small bank stocks, and when we say small banks, we mean these community banks, right? They operate a handful of branches in some sort of geography. They're smaller market caps, right? I think generally under 500 million or so. And basically, Tim's the strategy he looks at with these is, a lot of these stocks are trading below the assets that they hold on the balance sheet. Plus, they're prime targets to get taken over by bigger chains and some of the regional banks. Is that a fair summary, Tim?
That's exactly correct. It's years ago. We're going all the way back to the 90s after the savings and loan crisis. I realized that every person that I talked to that had what I'll call Main Street wealth, not Wall Street wealth. They ran a big construction company. They, had a very successful business in town, and so they're worth millions of dollars. They always, anytime you talk to them, they owned a ton of real estate, and they always owned shares in at least one local bank. In good normal times, local banks are licensed to print money, and when you've got a 400 or 500 basis point net interest margin, it's really hard not to earn a 12 to 15% return on equity as a banker. So just, very profitable compounding. But then you had the fact that we have too many banks, okay? When they first made interstate banking legal, because years ago, you couldn't own branches in 2 states. It wasn't allowed.
That's crazy to think about.
It really is. But this only happened in the mid 80s. If you were the First National Bank of Texas and you wanted to open a branch in Oklahoma, you had to go start the First National Bank of Oklahoma. You had to have 2 separate banks. Once that was phased out, we've gone from about 18,000 banks down to just a little under 6,000. We're going to go to as low as 2,000. We do not need this many banks in the United States. You're going to see 3 to 4% in a really good year, 5% of all banks get taken over, and it's not going to end anytime soon. So, which banks get taken over? We actually know that, okay? Most of the bank takeover targets are going to be smaller banks with lots of extra capital, measured by equity to assets ratio. That's going to be over 10. They're going to have capital, but they're going to be underperforming because that capital is going to be a drag on performance. Okay, so they're going to have lower returns on assets, lower returns on equity than the banks that are looking to acquire. So, same token, these banks are pretty safe, right? They've got all this capital. They're insulated against almost anything that can happen in the economy. Like the banks in our portfolio, even if the banking system had gotten waxed back in March, most of our banks would have survived because they have a ton of capital on the balance sheet. So now I'm, John Allison at Home Bank Shares, who's the HOMB is the symbol, the best banker in the country when it comes to doing deals, and he does one or two a year. He specifically outlined what they look for when they're making a deal, and I was like, damn, that's the same thing I look for when I'm buying a stock. So we're just trying to think like the guys that are doing the buying and get in front of them, and we think that will create what has created, excellent returns. Prior to 2020, the 3 years prior to that, we had over 35 takeovers at massive premiums in the portfolio. We expect that as we continue to get people vaccinated, the economy gets back to where it needs to be, we get a stimulus package passed to get us to the point of full vaccination in some sort of sense of normal, we're going to see that type of excessive takeover activity pick up again.
Yeah, and guys, the thing that I love about Tim's strategy is he's the only person that I know that has had like a long-term strategy of trying to pick M&A targets, and like he just said, nailed 35 of them. That was the next question that I have is how many of these M&A targets have you gotten? And now it's 35 stocks that you've picked as potential. No,
way more than that. It's 35 in the 3 years prior. Okay, we probably have 60 or more since inception in the portfolio. Because we started in mid-year 2013, and we were getting takeovers almost as quick as we could get buy recommendations out the door.
Wow.
So, and it's not going to stop. When you talk to the bankers, like John Allison and other bankers, they tell you as soon as we are able to start buying banks and feel good about it again, we're back at it. Right now, I think you get tremendous regulatory pushback on an offensive takeover strategy as opposed to a merger of equals. So what I think, as we go into the year, we're going to see more deals because I know that, Bank of the Ozarks, Western Alliance, Home Bank Shares, these guys want to be buying banks. And I can tell you, I'll just throw this one out there. There's only like 5 tickers left, but every banker I've talked to is looking at Florida. Okay.
Interesting.
They want to be in this market because all the money's coming here. So much Northeastern money came down here during the early days of the pandemic. Of course, it's always been coming down. We've got a flood. We were buying a house, this new house here in Bonita Springs during the summer. And the broker was literally getting sight unseen phone calls from people up north that wanted the same property, which cost me some money. So I, damn Yankees. So yeah, everybody wants to be in the Florida market. There's 5 tickers left. I would just buy them all and forget I owned them until you got the takeover notice.
I like that. And guys, you've heard me make the case for community banks before. When I make it's Tim's case that I'm making. I mean, I've followed him for years. I'm gonna drop a link in the chat. Tim does run a community and basically publishes his research on all these banks. Again, he's looking for the takeover targets. He's the only person I know who said, I'm going to go look for takeover targets and nails them. Right, I hold a basket of maybe 10 of these stocks or so with Tim's thesis on them. So I'm going to put that link in the chat. Check it out. I mean, it will pay for itself. It's one of the only products that I'll actually endorse.
Thank you. I'll give you one other one here. That's one of my favorite banks. That's still in our buy limit, so you guys can have 2 good picks plus buy Florida. That's ESA Bancorp of Stroudsburg, Pennsylvania. They're in the Poconos, the Scranton, Wilkes-Barre area, and edging down. ESSA. And they've made some acquisitions in the last few years that have moved them down towards the suburban Philadelphia market as well. This bank, the CEO here has done an outstanding job. They did a thrift conversion several years ago. 2013 seems about right. And everybody expected them to just kind of go the traditional thrift conversion route. It would be a liquidity event, and they would sell the bank as soon as they could when the 3-year hold period was up. It's mandated when you convert from a thrift. No, this guy got out there. He started buying other banks, making acquisitions, growing the bank. He grew some to the north up into Scranton, Wilkesboro, and then down to the south towards Philadelphia. And they've done an outstanding job. The stock's trading at 90% of book value. As I said, outstanding management, tons of capital, only about a 1% non-performing assets ratio, which is really good when you consider that northeastern part of the country and how hard they were actually hit by the pandemic in local economies. But this is one of my favorite banks. They've been very conservative. A lot of banks, I'm not gonna say most, a lot of banks have been taking money out of loan loss reserves right now because the calculations said that they could. That's a little dicey because we can see the end of the pandemic, but we're not there yet. So I think taking the money out a little too aggressive. These guys have been adding them in, going, let's see what happens. First of all, let's make sure we're standing when this is over, no matter what happens. I like that mindset. Very well-run bank, great market areas. Not going to fall out of my chair if somebody comes in with an offer of 1.5 or higher times book value for this bank, because it's just very in the right markets. And so yeah, ESSA, I think you could buy it right around here. I wouldn't pay much more than about 15% more than the current stock price for it.
Yep, and I will disclaim, guys, a lot of these banks that they are not super liquid, right? It's not like they're trading millions and millions of shares per day typically. So if you are getting into it, always recommend using a limit order. Is that fair to say, Tim?
Oh yeah, you have to use a limit order. If you don't use a limit order in these banks, you're going to be the market maker's lunch. Okay, you're going to get just beaten. It's ugly.
Yeah, you don't want to be the market maker's lunch.
You don't want to be the market maker's lunch. No.
Cool. All right, guys. So look at that. The ideas keep flowing. I promise you guys at the top of the show, we are bringing new ideas today. We now have 4, 5, 6, 7, 8 new ideas that I guarantee you were not tickers that you were thinking about before we entered today. Tim, thank you so much for coming and hanging out with us.
Hey, thanks a lot. I appreciate it. Appreciate your time today. Thanks for having me.
Absolutely.